Welcome to your March housing and mortgage update. I am going to title this video The Art of the Deal because that's what we're going to be talking about in this video. Whether it's what's going on at a political level, what you need in a lender right now, or what you need in a real estate agent, the art of the deal is more important than ever. Now, if you're new to this channel, I am a real mortgage lender. That's right, call me. I want to be your lender. 786-933-2077. I'm licensed in 48 states. My team's licensed in 50 states. We're one of the top purchase teams in America. So why does that matter? Because we're actually the people that are living all this, right? There's all these YouTube channels where they're like, market update, but they're not actually in the market. They don't actually talk to buyers. They don't actually do purchases. They just read whatever report they're getting and they make predictions off of it, okay? So this is like the real deal. If you're a buyer, if you're thinking of buying in 2025, here's what I'm seeing in March and what I think you need to know. Okay. Let's start off with mortgage rates. They're coming down. Thank God. Great, fantastic. It's been the headlines for the past week is that mortgage rates have hit their low in quite a while, and everybody's very excited about it because it makes housing more affordable. It's that simple. Lower rates lead to more affordable housing. So in the last 2 weeks, we've definitely been seeing better rates, which means happier buyers. Now, there's something that you need to recognize about these rates. Is it just like they're going down and it's easy? No. It's volatile as heck right now, guys. Look, we had a couple months there, January, February, where it was like pretty chill. And what I mean by that is as a mortgage lender, most people don't realize this. They think that like a rate is good for a couple days. No. Mortgage rates change every day, but when the market's volatile, they can change multiple times a day. No joke. And that's what I've been seeing for the last 2 weeks. So we're back to that world where if, for instance, I'm your lender, let's say that you're in contract, someone from the team were like, hey, we're at XYZ. If you like it, lock it, okay? And here's why. 2 hours later, it could be different. And you're like, what is going on? The art of the deal. That's what's going on, guys. That is what's going on. If you look at what's going on politically right now, the new administration is not playing games. They are not approaching anything with caution or with, the amount of speed, aggression, major moves for change is unlike anything. I've never seen anything like it in my life. Ever. And look, guys, I was a history major, so clearly I'm the expert on this. It's very interesting to watch. But when you have so much change happening at once, it creates volatility, okay? So here's what's going on with rates. I'm going to give you like the crib version, right? Because there's all these complicated metrics we could go into, but seriously. Anytime you start seeing the media talking about, oh, the economy, we're worried about the economy, rates go down. Tariffs, generally when they start talking about tariffs and Trump implementing them, it takes about a day, but you'll see the rates go up. So whenever they think the economy is going down, rates go down in a reaction to that. The tariffs, the fear's inflation. And whenever there's inflation, you see mortgage rates go up. So that's what I would say keep an eye on. If you start seeing a lot of talk about inflation, rates are likely trending up. If you start seeing a lot of talk about the economy not being as strong, rates are going to come down. That's the abridged version of all of this. Now, what's going on with the economy, right? That's the $1 million question. So it's interesting. As I film this, I'm filming this on a Sunday because I know tomorrow, which is when this is going to post, Monday is going to be crazy. So I'll be working with my clients. But, a couple days ago, Beeston came out and he said, we're not going to be going into a recession, but there'll be a slowdown, an economic slowdown, as we detox from our addiction to federal spending. Very interesting wording. I was impressed by the new age detoxing being brought into the financial arena. But here's the thing. The goal is to reduce what the government spends with the anticipation that the private companies will step in. That is what they are assuming will happen. So the jobs lost through the Doge cuts and everything else, they're assuming that the private sector is going to come in, but they're saying, hey, look, there's going to be this period of wonkiness while we rebalance from federal spending, putting it back into private corporations that are doing the bulk of the spending. It's going to be interesting to see, right? Because look, many federal employees, like I would be worried right now. It's very jarring what's happening, but that is what they are saying. They are assuming will happen and is the end goal. At the same point, you also have Elon Musk saying, hey, all this Doge cuts is going to lead to lower interest rates. You've got Beeston literally saying an American's dream is to buy a house and we need lower rates to do that. And we are focused on that. That's good. We need politicians to be saying that. We need the people who deal with the money of the United States to be focused on that. How everything turns out, we'll see, but at least the fact it's in the conversation for home buyers, that's a good thing, okay? That's a good thing. Now, I do want to bring up tariffs for a second, because one of the things that I saw that I think is interesting is when you see how the national media covers housing, they tend to lump it into like all one thing, whereas there's ultimately different buckets, right? In terms of tariffs, they're like, oh, this is going to be terrible. Home prices are going to be higher. And it's because they're just thinking of new builds, right? Because look, in theory, if there's tariffs on Canada, Mexico, China, will that make the cost of materials for new builds higher? Yes, it will. But at the same point, you also have politicians saying they're going to reduce the legislation on new builds, which should offset that. So who knows, okay? The cost of tariffs doesn't impact houses that already exist, right? That's what people need to think about. And you may be like, well, but the new builds are going to be so expensive. Look, the only way this could really play out like that would be if the tariffs go through, if there's no legislative relief for new builds, and you're in a market where there's new builds and existing, maybe, okay, maybe. But most of the markets where there's new builds and existing, there's a lot of inventory. And that's where we're seeing our buyers getting the best deals, the most aggressive negotiating. So I think that if you're watching the national media, you just have to take it with a grain of salt and realize most of them don't understand housing at all. And I know that sounds condescending and rude, but seriously, it's shocking. It's shocking. If you guys saw the stuff I saw, you'd be like, wow, like it's nuts. So we'll see, okay? For other markets, I mean, guys, I was talking to someone in New Jersey and we were joking recently, there's no new builds there, so tariffs are not going to affect that market. That market is affected by a lack of inventory. We're seeing a little bit more inventory, but not as much as we would like, right? Around the country, there are pockets, because I always end up with comments on these videos where someone's like, oh, she's a realtor. Okay, I'm not. I'm a mortgage lender. And they're like, they're giving away houses in my area. Okay, where are you? If you're going to put a comment like that, drop your location so the investors that watch my channel, they'll come visit you and help you out with that. There's lots of parts in the country where there is a lot of inventory and you can get a great deal, but there's other parts where there's still not. Some of those areas we're starting to see more inventory, but there's no houses being given away right now. Trust me, if there were, I would be buying them as an investor left and right. We're not there, okay? So really important on that. Okay, so let's talk about the art of the deal when it comes to your mortgage lender. We talked about the volatility. We talked about how we're seeing rates go up and down depending on inflation versus the economy. For example, Jerome Powell came out on Friday and he goes, the economy's fine. What's up with you guys? Basically, right? That's my abridged version of a Jerome Powell speech. He's like, the economy's fine. So we saw rates go up because they're like, oh, the economy's fine. Rates are up. Okay. Who knows what's going to happen Monday, Tuesday, Wednesday? If there's any signs of weakness in the economy, we'll see rates go down. The art of the deal when it comes to your mortgage lender. Here's the thing. You need a good mortgage lender. Like we've talked about this in 955 videos, but if you're new to the channel, let me help you here real quick. you need to make sure you're working with a mortgage loan officer who has the ability to renegotiate and knows how to do it. You're like, well, Jen, how am I supposed to find out? Easy. Hey, yeah, oh, great. When we do lock the rate, what happens if rates go down? That's what you ask. Because if you say that to me, I'm going to say, look, I have the ability to renegotiate. So if I lock you and rates go down at least 0.25%, there's a 0.375 fee, but depending on how much the market moves, I may be able to work it in. Here, do you want to go through a rate sheet and I'll explain how it works? I do a lot of rate renegotiations. Why? Because it's something that helps my clients. It's that simple. And if the lender goes, yeah, we can do it. Okay, what are the terms? Oh, well, can I do it multiple times during the transaction? Well, I got to get back to you. Walk away. Here's why. If they don't know the terms of rate renegotiation for their company, it's because they don't do them. If they come back to you and say, oh, I got it. Do you think they're going to be sitting at their desk thinking about doing that for you? Because none of these companies automatically do it. It's up to the loan officer. It's the art of the deal. I know I haven't read the book, but I'm just going to work this in a few more times. Drop it in if you read the book. Anyways, so you do want to make sure you're working with a loan officer that can renegotiate your rate. And that's because of the volatility. Am I renegotiating everyone? No, it depends on when you lock, right? But it's something I'm actively looking for my clients at all times. Number one, it helps them. Number two, it helps my business for the simple reason that if your lender calls you out of the blue and says, hey, guess what? I can save you some money. Do you want me to do it? Like, of course you're going to refer them to your friends and family. And the reason I call and get permission is because I only can renegotiate once. Okay, very important. We're having a water break, so I'm going to cover my mic. I had complaints about, anyways. Okay, the art of the deal when it comes to the real estate agent. This is something that I see that just kills me sometimes. And I want to talk to you guys about it because I don't want you to fall victim to it. So people do not recognize that the best attribute a real estate agent can have is the ability to negotiate. People think real estate agents are just these like fluffy, cozy ornaments that like open doors and you're like, I want to see these for. And it's like, no. A really good agent, like they know what houses to take you to. They'll show you what you want, but they're going to show you other stuff. But more importantly, they know the market, they know what they can get, and they enjoy negotiating. And they can afford to negotiate. So when I say they can afford to negotiate, there was a crazy statistic that came out last year that like less than 70%, hold on, more than 70% of real estate agents only closed one deal or less last year. Yeah, so that means like the bulk of real estate agents in America didn't even close a house. Seriously, or they closed one. Do you think they're going to negotiate? No, of course not. How could they, right? That would be like me walking into a motorcycle store to negotiate on a bike. I don't know anything about bikes, right? So no, they're not going to negotiate. Also, their paycheck is counting on this deal closing and they're not going to risk it. And you're like, well, Jen, how can I tell? Guys, I'm going to tell you this right now. Zillow, don't click the button to get an agent. Those are just people where Zillow's taking their commission or they're paying. But most parts of the country, you can look up the real estate agent on Zillow and it shows you how many houses they have sold. And the top negotiators are selling a lot. It's that simple. And another red flag, if you're like, oh, why are you having an agent? I'm already past that. If the house has been on the market for 30 days, 60 days, 90 days, and they're telling you to offer list price and they're saying you won't get it for lower, I would never believe that in 9 million years. These are my personal opinions, right? As someone who's been a mortgage lender for 18 years, I've watched over, $1.25 billion in purchase loans close, meaning all those different agents and negotiations. If a house has been on the market for 30 days and they're telling you to write a full priced offer, I would be like, wow, you really need a paycheck, right? Because here's the thing. If a house is priced correctly, it would have sold quicker. It's that simple. Or there's something wrong with the house. So you do want to make sure you have a real estate agent that will negotiate for you and enjoys negotiating. Now, look, If you're looking at a house that's $300,000 and they provide comparable sales to you that show it's worth $300,000 and you want to offer $250 and they're like, yeah, that's probably not going to work, I agree with them. Okay. It's all about what the comparable sales are. But really watch out for this right now, because I've had it with a couple clients where they're like, well, my real estate agent says, and I'm like, this is ridiculous. Like, you are leaving money on the table here, not asking for closing costs from the seller, just not doing what they should be doing. And it's because they never learned to negotiate. So really, really important, mortgage lender and real estate agent, you want someone that will negotiate. Now, very quickly, I covered this last year, but if you're new to the channel, in most parts of the country, you have to sign a buyer's agreement before you go shopping with an agent now. That buyer's agreement has two things that are negotiable: the commission they get paid, as well as how long you're exclusive to them. Now, would I marry someone for 6 months and be exclusive to them before we went on a date? No. So personally, what would I do? I mean, honestly, guys, I would probably only do the 7-day commitment and say, look, if we get along, I'm happy to extend it. That's my personal opinion, okay? Because look, I get the calls where someone's stuck with a real estate agent. They're like, I hate them. I hate them so much. And I'm like, I'm so sorry you're going through this. And then they have to go through the process of getting out of the agreement. It's a nightmare. It's a nightmare. So know that you're going to be presented with this. Know that you can negotiate. And look, if you go, hey, like, I really just want to test this out, make sure we're a good fit before we, do a 3-month or a 6-month. And if they refuse to do that, it's a red flag, right? It's like a guy that's like, hey, you got to be my girlfriend for 6 months. And you're like, hey, like, can we get a coffee first? Like, how about coffee? I texted you twice. Okay, well, I think I'm going to go to coffee. No. Okay, that's because if I go to coffee with this guy, like, he's going to be a creep. That's why he doesn't want to go to coffee. Same thing, guys. Think about it. It's weird. It needs to be a good relationship, okay? Now, the other red flag on this, and it's a key to find out if your real estate agent is going to be a negotiator. In 2024, the reason you have to sign these now is because the buyer can pay the real estate agent's commission. Unless the real estate agent negotiates with the seller for them to pay their commission, you're on the hook. Yeah, it doesn't even matter what loan type, even VA, no joke. So, I have yet to have a client that wants to pay their real estate agent. So what you want to say to them is, hey, like, I want you to negotiate with the seller to pay your commission. Are you comfortable doing that? Most are going to say, yeah, totally, no problem. We haven't had any issues with it. It's not a big deal in our area yet. But if they say, I'll only show you houses where the seller will pay, walk away, okay? First of all, that's not the way that whole rule and agreement was supposed to work. They're not supposed to be calling houses before being like, hey, you gonna pay me if I show up? But it also shows you they're not gonna negotiate, right? It's a negotiation. Everything is negotiating for their commission, negotiating for a lower price, negotiating for the seller to pay your closing costs, negotiating in case there's stuff wrong with the house. You need a negotiator. Can't stress it enough, okay? So a little bit of a spicy video, but it's like, look, I know we're in a real spring market this year. We are. And I'll tell you why. The last few years, we haven't had a real spring market. It's been like, hey, is it coming? Is it coming? Is it coming? But I started seeing a lot of activity in January. This month in March, I'm going to close double what I closed last year for the simple reason that it's a real spring market. You've got a little bit more inventory. Buyers are sick of waiting. We're all sick of waiting for rates to come down or housing to get more affordable. People have been waiting years for that. And now rates are coming down a little bit. So definitely get out there, take a look. If you guys want to get pre-approved, fully underwritten, make sure you're working with a lender that knows how to do a rate renegotiation, watches the market like a crazy person, but also is trying to look out for you so you don't end up writing a full price offer or 10K over on a house that's been on the market for 60 days. Feel free to give me a call, 786-933-2077. My team and I are here to help you. We want to be your lender. We want to help you home. I want to help 1,000 people reach their home ownership goals today. So I hope you will be one of them. So please reach out. Thanks for watching, guys.